Hello everyone, welcome back to my YouTube channel Wiki Tech. I am back with another topic insurance. This topic is important insurance term and concept. Out of pocket expenses, the term out of pocket and cost at are a cost sharing refer the up portion of your medical expenses you are responsible for paying when you actually receive health care and you many monthly premium you pay for care is the separate from these costs. The annual deductible is amount you pay each plan years before the insurance company starts paying its share of the cost. Deductible is the $2,000 then Howard and responsible for paying the first $2,000 in health care for the each year and after which an insurance company would start paying its share. The annual deductible account your pay each plan and before the insurance company start paying its share of the cost. If the deductible and $2,000 and then you would responsible for paying the first $2,000 in health care you receive each year and after each an insurance company would start paying its share. Company for copy. The copy is fixed upfront amount you pay each time you receive care when that the care is the subject to a copy. For example, a copy of the $30 might be application for doctor visit, after which the insurance company pick up the rest. Plans with higher premium generally have lower copies and vice and versa. Plans that do not have copies typically use other methods of cost sharing, and the copy is fixed and upfront amount you pay each time and receive the event and care is the subject to copy. For example, a copy of $30 might be application for doctor visit, after which insurance company picks up the rest. Plan and with higher premiums generally have lower copies and vice versa, and plans that do not have copies typically with other method of cost sharing. And the currencies is the percentage of cost of your medical care, and for MRI that cost and $1,000 you might pay and 20% and $200 your insurance company will pay the other 80%, and $800 plans with a higher premium typically have less and currencies and coin shores and typically have less coin shores. The annual out of package and the pocket maximum. The annual out of pocket maximum is the most cost sharing tool will be responsible for the year is the total of detectable copies and the coin shows but does not include your premium. Once you hit this limit, an insurance company will pick up 100% of covered cost of remainder of your plan year, and most enrollers never eat the out of pocket limit. And but it can happen if a lot of costly treatment for serious accident or illness is needed, and plans with higher premium generally have lower out of pocket limits. And once you hit limit, and the insurance company will pick up an 100% of your cover cost for the remainder of the plan year, and must enroll never each far out of pocket limit, and but can happen it a lot of costly treatment for serious accident or illness is need plan, and which higher premium generally have lowest out of pocket limits. And what is mean to be a covered benefits, the terms covered and benefit and covered and the used regularly in the insurance industry but can be confusing. A covered benefit generally refers to health in and health services that is the including, i.e. covered and under of the premium for give health insurance policy that is paid by the for a given health insurance policy that is paid by and on behalf an enrolled patient, and covered means and that some portion of the allowable cost of health service will be considered for payment an insurance company. It does not mean that the services will be paid and 100%. The will be considerable payment by insurance company does not mean that the services will paid and 100%. For example, in plan under which an urgent care is the covered, a copy might apply to copy as an out of pocket and expense of the patient. If copy is $100, the patient has to pay this amount usually at the time of service, and the insurance plan covers the rest of allowed cost of the urgent care service. Is some insurance, an insurance company might not pay anything to what cover and benefit. For example, if you patient have not yet and meet annual and detectable and of the $1,000, and the cost of covered and health insurance provide and for $400, the patient will need pay the so 400 after the time of services. What make the services cover the cost and the what is make the services cover the cost and counts towards the annual deductible, so only $600 would remain to be paid by the patient of the future services before the insurance company start to pay its share. Keep supporting, keep watching, must subscribe my YouTube channel Wiki Tech. Allah Hafiz.